Hello everyone, how's it going? In this video, we will cover Bed Bath & Beyond, trading under the ticker symbol BBBY. The market has been volatile recently, with many equities being up and down big time. So many people are interested in the stock BBBY because of the short squeeze potential. In this video, we will take a look at the stock from a technical and fundamental perspectives and determine what would be the best approach. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. Over the past few days, the stock price of BBBY took really another tumble from barely above $1 to around 81 cents. And there are signs that things are stabilizing around that region, but to be honest, it is still too challenging to predict where the price will fall to exactly. Now, currently, that region can be a psychologically significant level to hold off the short-term sell-off attempts, but no one can really predict beyond 1 week. Over the past 5 days, the sell-off has reduced the share price by more than 34%, by 43 cents. From the high ground to around $1.21, it then decreased by more than a third over the course of a week. The downward trend is more obvious per the course of a month, taking a tumble by more than 50% as a result of the reverse stock split. With the situation remaining volatile, the market will need more reassurances before they can believe that this sell-off can truly end. And the intention of BBBY is to remain in business, that much we can be certain of. With significant challenges ahead, that's for sure, both fundamentally and financially, because it's kind of difficult to operate a, retail business in this kind of environment, but it's also difficult to raise capital with that kind of stock price. So the last time we talked about BBBY, I mentioned that now might be a time to start looking for a potential entry point. I think that we might have to be a little bit more patient and cautious to make sure that the market finds a new support region that can last for at least a week before we enter. So Bed Bath & Beyond Inc. is a home goods retailer operating under the ticker symbol BBBY, and it was founded in 1971, currently headquartered in New Jersey. It operates stores in North America, covering the US, Canada, and Mexico. The company has a wide range of products for home, bedding, kitchen, and bathroom. They offer a pretty wide variety of products across different kinds of categories, and they have both physical stores and e-commerce platforms, providing the customers the maximum flexibility. One of the key strengths of BBBY is its strong brand recognition. Indeed, the company over the years has built a solid reputation, offering a wide selection of high-quality products at competitive prices, helping it attract a loyal customer base. Another strength is the diversified business model. In other words, they sell online and offline, and they sell different kinds of products across different categories. So BBBY has historically been successful in both business and also maintaining business relationships with suppliers and vendors. This allowed the company to secure exclusive deals and to maintain their existing supply chains. However, in recent years, the company has been facing some serious challenges, especially in the face of increasing competition from e-commerce giants like Amazon, and also the declining foot traffic in its physical stores. So to address those challenges, BBBY focused on improving its e-commerce capability and also on store closures and cost-cutting measures. The company has closed down many underperforming stores and is currently still looking to cut costs by reducing its workforce, closing down distribution centers, and consolidate its supply chain. Those measures will help the company to become more efficient and competitive in the future. But with that being said, I'm not fully convinced that the company remains above the water level, because recently there are some rumors suggesting that the company could go under, or in the very least, the going concern assumption could be put under rough test. Over the past 5 years, Bed Bath & Beyond revenue steadily decreased, with a decline of almost 20% between 2017 and 2020. The decline in revenue has been also coupled by a decline in earnings, so the company has been reporting losses for several quarters by now. In terms of stock performance, BBBY's shares have been under serious pressures, having lost more than 70% of its value since the peak in 2015 and underperformed compared to the overall market. BBBY also faced increasing competition from e-commerce giants, as we mentioned previously. And also, the company has been facing the declining sales in its own physical stores. Now, the poor financial results are also affecting the company's capacity to continue its operations, or this is putting some serious threat to people's trust in the company's long-term future, if there is any. The current sharp decline in BBBY's share price is caused by this concern, also creating a great amount of volatilities. More than 40% of BBBY's equity is owned by institutional shareholders. The rest is owned by retail. This means that the stock has a relatively high volatility, also a potential stock to invest into in the long term if we overlook the short-term volatility. One key behavioral difference between the institutionals and the retails is their behavior and also their approach. They tend to have more access to corporate governance people, and they are more likely to vote on important matters and decisions. Additionally, institutional owners tend to have a longer horizon in play, so they tend to focus on the company's performance in the years or the decades to come instead of coming in and out over the next few weeks or month. So this is why I would say that having some institutional owners can be reassuring. But of course, in the particular case of BBBY, it could also suggest that they are simply not interested in dumping a position that could bounce back because of a variety of reasons that may not have anything to do with the fundamentals. And so far, I have to say, they are partially right, to say the least. One of the key catalysts that may explain the retail interest in BBBY despite the challenging fundamentals is the short squeeze potential, due to the significant short position that is currently stacked against it. There are currently around 73 million shares being shorted off exchange, representing about 55% of the short volume. This can support the theory according to which there is a concerted shorting operation from institutional short sellers against BBBY, probably because the fundamentals have supported this outlook so far. I consider that a short position size is significant and can be considered as a major catalyst and reason why people want to buy BBBY shares to begin with. The takeoff could be unrelated to the company's fundamentals, or I would say it has to be unrelated to the company's fundamentals. But simply, the equation of supply and demand can influence the share price and its fate, regardless of how it's doing in terms of sales and profits. It's also important to note that a short interest is not a guarantee of a short squeeze, but nevertheless it can be a very critical metric to look at. It's worth considering that the short sellers can have valid reasons for their bearish sentiment, and I would say that usually when people go to short squeeze, they are ready to assume unlimited potential losses. So this is why they are relatively sure of their shot, or they're relatively optimistic that they are right and that this company will tank further. So far, I would say that BBBY does give people a lot of reasons to say that yes, they are right, and yes, BBBY isn't doing so hot. And for this reason, I would say that going in, we have to assume that BBBY will not necessarily going to be a stock to invest into for the long term, at least with the current conditions. And I would say that the short squeeze would be one of the reasons why people might want to consider in trading BBBY shares in the case there is a mass redemption of the short positions. My recommendation for BBBY is to keep it on your short list and to eventually start looking for an entry point once the prices stabilize, assuming that the fundamentals do not continue to go worsen, which can be almost assured in the immediate future, but I wouldn't say the same for the medium to the long term. The emphasis with the stock would be to speculate in the short term, like volatilities, with a profit target of around 30 to 50% of the cost basis in order to make your risk worthwhile.